Hello everybody, welcome back. So, let's be honest, nobody wake up in the morning and say, I can't wait to learn more about F-bar thresholds. Yeah, let's be honest, nobody think of that. But if you're running a US based company, but your currently is from say China, Japan or anywhere in the world, Canada or Australia, this may be the video that save you from IRS love letter. The love letter. The 5-figure penalty notice. You don't want to receive that. Okay, so you know what? Let's grab a coffee and maybe grab a notebook so you can scribble something down, or just clear your mind and listen to this. Okay, so let's get started. So we're talking about a topic that's maybe forgotten, or maybe you thought that this is not important, but in fact, this is very, very important, and this is a special one. Okay, so we're talking about foreign income and reporting rules. Okay, so to be honest, a lot of my clients is from tax industry, so U.S. tax system does not really care about you are coding for your next app, or whether you just you buy real estate or whatever. It doesn't really matter. Okay, the general rule of thumb is that if you're holding a U.S. passport, or if you're holding a green card, you are playing the U.S. tax rules. Okay, and wherever you are, worldwide, you can play that rule. Okay, so yes, if you got say your income from I don't know, Tokyo, and you buy something, invest something in Hong Kong's dividends, and then you got some like side hustle from selling books from in Singapore, right? All this, as long as you are holding U.S. passport or green cards, all belongs on your U.S. tax return. Okay? And now, if you are a special case of a non-resident alien, that's just fancy terms to say that you are not a U.S. citizen, but you're not currently living here full time. Okay, you are generous, but as I said, there are special cases. But if you are just to say you're a citizen, you're not currently living there full time, and you only need at that circumstances, you only need to pay tax on U.S. sourced income. The rest of it, as I said, from Singapore, Hong Kong, Tokyo, you don't need to pay your U.S. tax, but you have to pay the tax at that local jurisdiction. General rule of thumb. Okay, of course, in different scenarios, the scenario is a little bit different. This is just general, the whole overview, whole picture here. Okay, but there's also a big but for the non-resident alien. Okay, so for example, if you find jointly with your say U.S. spouse, and sometimes you can even opt to be treated as U.S. residents. Okay, for example, you want to claim some certain tax benefits, you can do that. Congratulations, and you will be signed up for the worldwide taxation too. So every income around the world will be subjected to U.S. tax. So yeah, so you need to think really careful before ticking that box, and yeah. It's not just for just the one take. You can choose, does not mean that you choose correct, or there is no consequence of choosing the wrong. Okay, you can choose whatever you like while you're filing. You can of course choose the wrong one, or you can choose the like you choose this will not save you tons of money one. You'll pay more tax one, or if you choose that will result in penalty one.